morning, everyone. Good morning, everyone. It is 10:01, April 7th, 2025. It is so good to see you all this beautiful Monday morning here in Austin, Texas. Thank you all so much for taking the time to join us for this Monday touch point. Lots to go over this morning. Crazy stuff happening within the bond market. You can see the chart behind me. But as of now, we are looking at a wild and crazy increase in the bond market. We are up 12.8 basis points, and you can see that behind me. Amazing what's happening within the bond market. Of course, a news headline just came out this morning that apparently there's going to be a pause on the tariffs, a possible 90-day pause on tariffs, except for China. And of course, that right there is causing the bond market to plummet, which means that yields are going up. And we saw a little bit of that on Friday before the weekend, where a lot of the gains that we had by our Friday morning just were reversed. We actually ended up on the positive side of things on Friday. And then, of course, this morning, just way up on the yields. But we did talk about that on Friday. You remember I showed you the chart and I said, hey, this could very well be a short-lived thing. We could see the yield go back and reverse all of the multi-day gains that we've experienced. And as of now, it looks like that's exactly what is happening with the bond market. We already noticed a slight increase in mortgage rates from Friday until today. Friday, we thought for sure that we were going to hit 6% on the 30-year mortgage, fixed 30-year mortgage rates, and that right there has reversed itself. We actually experienced a slight increase. Okay, White House issued a notice that it was fake news, no pause. Whoa, let's take a look at this right here. Let's see what's happening. And, well, we should see a complete reversal if that is the case. Looks like it is reversing a little bit. Well, y'all, I'm telling you, we are living in exciting times right now. I'll say that much. If anything, it makes the day really exciting, doesn't it? Well, but the one thing that we can count on is our tried and true and faithful new listing to pending ratio, the single biggest best leading market indicator. Violet said, this is not exciting. Violet, I get excited over just the craziest stuff. I'll say that much. So I'm always excited. I'll say this. I'm always excited. There's always something to be excited about. That's my attitude on it. We're going to update our new listing to pending ratio. Lots to go over. We're going to take a look at inventory, what's happening with active listings. Let's go ahead and hit it hard, you all. I'm so excited to have you all here. Let's go ahead and take a look at the previous few weeks and see what is going on with the previous pending. I went ahead and updated this really early this morning, crazy early this morning, but let's see if anything has changed from when I updated. And we are going to focus on the 6-county area. Keep that in mind. We always focus on the 6-county area residential. And we're going to be doing Burnett, Travis, Williamson, Bastrop, Hayes, Caldwell, along with Burnett counties. We're going to go from the 24th to the 31st. And we're going to focus on pendings. And that's going to go up to 514. Good stuff. Let's go ahead and take a look at the 17th through the 24th. That's going to be 540. 540. We're going to go from the 10th to the 17th. That's going to give us 583. Good. So now we're all updated. The ratio for 2 weeks ago is at 0.67. 0.67 ratio 2 weeks ago. That puts us right there in that tangible to substantial increase in inventory. And of course, we can see that the gain for 2 weeks ago was 550 listings on the positive side. That's going to be the difference between new on the market, back on the market, minus active under contract and pending. That's why the ratio is at 0.67. For those who are joining us for the first few times, really quick on the ratio, we simply divide everything that is new on the market by everything that was absorbed by the market. If you have a ratio under 1, that means that less properties were absorbed in relation to what's new on the market. If you have a ratio over 1, that means that more properties were absorbed by the market, active under contract and pending in relation to the properties that came on the market. Therefore, inventory will go down over time. But if the ratio is under 1, that means that inventory will increase, will continue to increase. When the ratio is right around that 0.7 to 0.8, we're going to get the tangible increase in inventory. Under 0.7, we're going to get that substantial increase in inventory. So we're really close to that 0.7. That's where I say we're in between that tangible, substantial increase in inventory. If you are under 6, inventory just absolutely explodes. Let's start taking a look at the number of new listings from the 31st to the 7th, which is today. Keep in mind that I will update this tomorrow morning. I actually update this every single morning. So whenever you want the latest and greatest, this is updated every single morning. My goal is that by the time you wake up, you will have access to all of the updated latest and greatest stats. Let's take a look at the number of new listings that have entered the market. Oh, okay. Last week, it was 1,470. It is 10:08 a.m. Do you think that we are already over that 1,470, or do you think that we are under that 1,470? It's only 10:08, so the new listings are going to keep on. We're going to keep on adding new listings to the market between now and 11:59 a.m. this morning. What do you think? Did we already beat last week or no? Okay, Bertina right there starting us off over. Harold following with over. Yes, you all, we are over. We are at 1,520. 1,520 listings new on the market. That means that we're going to cross 1,600. When this is all said and done, when I update this information tomorrow morning, we're going to be at over 1,600 listings new on the market. Amazing. Let's take a look at price increase. Our builders increasing prices. Oh, 178, not bad. 178 price increases. What about price drops? Okay, we're at 1814. That's going to give us 91%. Last week was 93%. We're at 91% right now. Let's take a look at back on the market. What's going on with this? We are at 192 back on the market. That's going to give us 13%, matching what we had 3 weeks ago at 13%. Keep in mind, the lower the back on the market, the cooler the market. Contrary to popular belief, people are like, oh, if the market is really slow and if the market is quote unquote crashing, that means that we're going to have high back on the market. Not true. The complete opposite. The hotter the market, the higher the back on the market. The cooler the market, the more sellers are willing to negotiate with the buyers post-inspection. The more buyers are able to go out there and shop around for homes, take a look at 20, 30 homes, make their decision, sleep on it. They feel good about it. They get a really good price on the front end. They negotiate repairs after the amendment, after the inspection through an amendment. The likelihood of the property coming back on the market diminishes. So the cooler the market, the lower the back on the market. What about active under contract? Let's take a look. We are at 506. Now, this is where you, beautiful people, most of you at least, get to guess. Go ahead and give me 5 guesses. 5 guesses. Okay, we're going to start off with Harold at 240, followed by Melanie at 213. We are 2 down. We've got Seth at 212. Sonia at 267. Let's get a few more guesses right here going. Sonia is at 267. John D at a very bearish 200. We have our 5 guesses. Leah coming in at a slightly bullish 270. I love it. We are going to be at, oh my. Okay. This is good. I'll take this. 340. 340. Not bad. Not bad. Little improvement in rates, little bit of a bump up on the pending. Now, the ratio is still at a 0.49, but it's a good way to start the day at 340. Y'all, some of y'all were saying like 200. Let's take a look. If we had 200 here, wow, the ratio would have been 0.41. I thought it was too cold to buy a home this weekend. Boy, it was freezing, wasn't it? Y'all, 340. I will take 340. Now, what does this mean? It means that we're going to end really closer to that 525 mark. If we go 525, okay, that'll put us at a 0.60, mainly because of the number of new listings that have entered the market. We've got 1,520 new listings that have entered the market. That is a really high number. That is going to draw the ratio down a little bit. So even though we're starting off at 340 pending, very encouraged with this number, we're still at a 0.49 ratio. We're starting the week off at a 0.49. What does that mean? We're going to settle somewhere around the 0.65. I'd say we're going to have a repeat of last week, very close to that 0.67. Of course, this 0.67 will go up. It'll settle somewhere around the 0.7 to 0.71. And the reason why is because at 11:59 on Monday, new price increase, price drop, back on the market, active under contract, it all freezes. The number will never change again. Whereas pendings, we'll update pendings for the next few weeks because agents are really bad when it comes to updating pending transactions, especially builders. So that number naturally will go up. Now, keep in mind, this right here is a really unique start of the week. And the reason why is because we overlap the Mondays. So next week is going to be from the 7th all the way to the 14th. So we overlap one of the days, and we do this for a reason. It does provide us with a very consistent number. Now let's take a look at the monthly, because the monthly starts on exactly the 1st, and the 1st was a Tuesday, so we are not overlapping the Monday. The reason why we overlap the Mondays is because a lot of activity over the weekend gets reported on Monday, so I do like to overlap the Monday. It gives us a really nice consistent reading. But on the month over month, we eliminate the Monday because this month we started the month on a Tuesday, and that's going to give us a very accurate reading for the month. So let's start updating the month. Last month, we ended the month at a 0.66 ratio. Once again, that really tangible to substantial increase in inventory, a plus reading of 2,042. So if I take everything that's new on the market plus back on the market and I subtract everything that went active under contract and pending, we are plus 2,022. March of 2024, we were plus 1,344. That is a huge increase. So let's start updating the entire month of April to see what's going on. Number of new listings, we are at 1,369. Price increase, we are at 158. Price decrease, we are at 1,563, 91%. We are back to numbers that we have not seen since October, 91%. That is going to be the difference between everything that went up or down in price. So if I take only up and down in price, that does not mean that 91% of the new listings or the active listings went down in price. That's not what that means. That means out of everything that could have gone up or down, what percentage went down? It's 91%. We have to go all the way back to October. That's when we had a 91%. Back on the market, what's going on with back on the market? We're at 163. 12%. When was the last time? I don't think we've ever had a 12%. And we've been tracking this for years. Let's keep on going. We've been tracking this for longer than some of our new team price agents. Yo, when I see like the birthdays of some of our newer agents, I just feel like turning on like a black and white TV or something. Like I feel so old. Okay. We have to go all the way back to February of 2003 to get a 12%. Okay. No, we got 11% February 2004. I have to go all the way back to 21 years. We just broke a 21-year record on the percentage back on the market. Very low number. Very low number. Let's take a look at active under contract. Oh, I'm almost a little bit terrified to see the ratio now. 369. Okay, let's get a few guesses. I have no idea what this ratio is going to come out. The ratio, because we're excluding the Monday, we're not overlapping. So this is month to date. What do you think the ratio is going to be? Let's get 5 guesses going on what do you think the ratio is going to be for the month. Keep in mind the ratio for the week was 0.49. What do you think the ratio for the month is going to be? Do you think it's going to be 0.49, 0.45? Okay, we've got Seth coming in at a 0.43. I need 5 guesses, you all. I need to get some engagement here going with you all. This coffee is delicious. My goodness. Okay, we've got Melanie Price coming in at a 0.39. We've got 2 guesses down, 3 to go. We've got Sonia Komisarenko coming in at a 0.45. I am not, if I understand it all, but 0.44. It's a good guess. Okay, we've got 1 guess left. One person needs to go out there and just throw a number. Okay, Harold closing us off at a 0.40. Let's take a look. How many pendings? Oh, Harold for the win at a exactly point. Oh my gosh. That is crazy. 0.40 ratio. That so far this month. Wow. That is amazing. So we're already on the positive side, 924 listings. That is just stunning. We are only 7 days into the month, and we are over 50% into the difference that we had for the entire month of April 2024. Inventory is exploding. Well, are y'all noticing that when you're out there showing homes? Where it's like new listing, new listing, new listing. Some of y'all need to change your search for your clients instead of ASAP. Like, don't do ASAP search for your poor clients. They'll get 50 emails a day. You're going to be spamming them if you do an ASAP search. Unless, of course, you're at, I don't know, Circle C, maybe Village of Western Oaks, or you're at Shady Hollow. Certain areas you might want to do ASAP. But otherwise, if you've got clients looking in, Pflugerville, Round Rock, Hutto, Austin, don't do an ASAP search. You're going to spam your clients to death. People still think that April is the best time to list. Haven't we had the peak this year already? That's a very common misnomer, Sonia. April is the peak as far as sales and pricing is concerned, but by the time you actually list your property in April, unless it's priced extremely well and all of the other properties have been rejected and that perfect property comes on the market, they're really going to miss the mark. Wow, a 0.40 ratio. Amazing. Let's take a look at how many sold. We've got 257, 257. How many withdrawn? I'm noticing quite a few withdrawn. Wow, already 115 withdrawn. And how many expired? Only 66. Okay, there is the update, you all. Let me go ahead and just move this to a different screen. Let me print everything as a PDF so that you can see everything. Let me go ahead and just print everything as a PDF, and we will be able to review all of this information. It is downloading. Give me 1 second so I can get this here for you, and we can review some charts. Give me 1 second right here. We've got the new listing to pending ratio. New listing to pending ratio. Let me go ahead and just update this. Oh, wrong one. I'm going to have to go back here and just print this as a PDF. Give me 1 second so I can just get this converted to a PDF, and we will be able to review some of our awesome graphs. Okay, we've got download. Let me go ahead and just download this for you all. And I'll be able to open this up. Okay, perfect. There we have it. Weekly, year over year. This is really amazing. So we are down only 36 listings, same week, year over year. We're going to make this up, no doubt. We are down 44 on price increase. We're up 485 on price decrease. We're down 81 on back on the market. And so far, we're down 31.7% on pending. I don't think we're going to make up that pending. There's no way. We're down 147 on active under contract year over year. We're down 246 on pending. One thing that's really fascinating is the increase same week, year over year, same week on the new listings. We've got a lot of positive numbers on the new listing, but we have been lagging last year on pendings since the beginning of the year. And you can see that that's expressed on the ratio. Let's take a look at the monthly information right here. Let's look at some graphs. Last month of March, we were on the plus side of 2,042. The year before, we were on the plus side 1,344. That's a big difference right there. That's a massive difference. That's a 50% increase. We are already on the plus side 924 listings. That's the difference between new and pending. Last year, for the entire month of April, we were at 1,772. Right now, we're at 924, and we're only 7 days into it. We are going to blow this number out of the water. We're going to blow that number out of the water. It's just going to be amazing. And take a look at the ratio. Oh, I need to add the pending ratio right there. I'll be sure to add that ratio before I publish it. But there you have it. There's the monthly new listing to pending ratio. It's going to go up. I'm not really concerned about that 0.40. We're only 7 days into the month, but it's going to be low. It's going to be a little bit north of that 0.50, but we are starting off really, really low on that new listing to pending ratio. Even though 340 properties going pending over the past 7 days is not bad, keep in mind that the reason why this ratio is so trusted is it's the ratio between new and absorption. So you could have a situation where the absorption is improving because rates are improving, because people are seeing deals out there, but because we are experiencing a flood of new inventory hitting the market, that's going to drive the ratio lower. Once the ratio is driven lower, then what happens? More pressure on pricing because we've got an increased inventory, and that's going to provide more pressure on pricing. That is where we are right now. We're at a 0.40 ratio. That's just absolutely amazing. Now, when you take a look at cumulative, let's look at a few cumulative data. Let me pull up some cumulative information. Cumulative new listings from January to April. Now, we're really early into April, but last year we were at 17,569. We're currently at 13,171. Are we going to bridge that gap? It's cumulative from January to April because when you look at new listings, okay, I don't have April there quite yet, so I'll be sure to update this. But, we had in March, 5,348 new listings enter the market, and March of last year, 4,963. April of last year, 5,363. I'd say we're going to beat that number simply based on how many listings we've already seen come in the market. We're going to beat that number. So where are we inventory-wise when you look at the number of active listings on the market? We are just shy of 14,500. We're at 14,498 active listings currently on the market. That is an increase of 260. And that's going to be the highest daily increase going back a while. We had 259 back on March 10th. We've got 260. And keep in mind, the day's not over quite yet. We've got 357 increase weekly. We've got 1,570 increase monthly. So we've got 12.14% more active listings on the market today than we did exactly the same day last month, 20% year over year. On the pending side of things, good news. We crossed the 4,500 listing mark on the pending side of things, 45 to be exact. That is down 6.3% year over year, but we're no longer double-digit drop year over year. That's very encouraging. We are noticing that increase in pending. That's very encouraging. That does put us at the 23.9% activity index, pending divided by active plus pending. So backtracking a little bit, we hit some 25%ers here beginning of February, towards the end of February. Pretty much all of February, we were bouncing around the 25%. We're at 23.9 right now. And when you take a look at everything that has sold over the past 365 days, that does put us at 5.14 months of inventory. And let's take a look at a few charts. Here we've got active listings. We are up 20%. The red is last year. The gray is 2 years ago. But you can see this big bump right there in the number of active listings. When you look at pending listings, thankfully, we are seeing just a really nice consistent increase on the number of pending listings. The last few years, we've got last year, the market, when it comes to pending listings, peaked third week of April. 2 years ago, the market peaked like last day of April. It's going to be really interesting to see what happens this year. When are the number of pending properties going to peak this year? Let's take a look at activity index. And we can see that activity index bouncing up and down really close to that 24%. Whereas last year, this same day last year, we were at 28.7%. 2 years ago, this time 2 years ago, we were at the 34 to 35% activity index. Right now, we're just shy of 24. So I do feel like showings are picking up. You're absolutely right. They are picking up. No doubt about that. I'm noticing that also. The pending numbers are reflecting that, which is very encouraging. What about months of inventory? We're at 5.14. This time last year, we were at 4.21. That is going to be a 22.2%. Now, this is one that I'm really curious on how long it's going to take for us to break the previous record on the number of active listings currently in the market. The previous record was Monday, July 15th, 2024 at 15,503. We are short 1,005 right now. I would say 10 days. What do y'all think? 10 days? 10, 15 days max, we'll break that record, which means we're going to break that record second to third week of April, whereas last time it was May 15th. I think it's going to take about 2 to 3 weeks. 2 to 3 weeks, we'll break that record. Now, out of all of the listings that are currently in the market, 47.3% of those have had a price drop. That number is increasing a little bit also. We are seeing more and more price drops because, of course, inventory is increasing. There is one specific subdivision that I've been tracking faithfully, and 1 month ago, there were 17 active listings on the market. Right now, there are 44. And out of the 17 that were active on the market a month ago, only one is under contract. So you've got only one out of those original 17 are under contract. And then you've got now 44 active listings on the market. That's going to put a lot of pressure on pricing. It has to put a lot of pressure on pricing. Let's take a look at the activity index. We've got, which are the ones? Let's take a look at city first. Which ones are under 20%? Let me look at this one right here. Under 20%, we've got Cedar Creek, Driftwood, Bastrop, Wimberley, Burnett, Smithville, Lago Vista. Last one on the list is going to be Spiceswood at only 11.3. Cedar Park killing it at 37.1. What about zip code? Let's take a look at that chart on zip code, see what's happening with the activity index. Let's take a look at the ones really close to that 20% mark. Well, we got 5047. Wow, I'm surprised to see 47 there. A 21.4% activity index. Keep in mind that's pending divided by active plus pending. That's going to be your leading market indicator. Georgetown under 20%, 7721 under 20%. And then look at 7701 at a just awful 6.9% activity index. Really amazing just to see what's happening with the activity index within certain areas. If you take a look at 78701, and this is going to be months of inventory in the activity index, between $900 and $1 million in 78701, there are 36 months of inventory, and there's no activity. That's blank, meaning there's not a single property that's currently pending, not one. When you look at the 4 to 500, there are 36 months of inventory in the 78701, only 11% activity index. Just look at 04, 3 to 400, 37 months of inventory. Which one is the highest number? Okay, we've got 78752. We've got 51 months of inventory in the 78752 between 5 and 600. Those properties, they just need to knock down the price of those, bring those down into the 4 to 500. 51 months of inventory. That is just shocking. Is that going to be the highest one? Looks like it is. So the single highest inventory, when you break it down per price range, is going to be the 78752 at 51 months of inventory between the $500,000 and $600,000. That no activity, not a single property is pending within that specific price point in the 78752 zip code. Just really amazing when you look at it this way. And just goes to show that real estate is hyperlocal, because between the 4 and 500, there's only 4.5 months of inventory. Between the 3 and 400, there's only 2.3 months of inventory. Just incredible to see what's happening there. Now, let's take a look at a few more things. We're going to take a look at this market update. Now, there are a lot of different ways to measure months of inventory. You can take the average of what has sold over the past 365 days. You can take the average of what sold last year, adjust it for the difference between what's pending this year. Actually like that method better. That's the one that I use here. And it's just going to range anywhere from the 5.2 to 5.6 months of inventory. What I do on this one, and this really is my favorite reading of months of inventory, is that I take the difference in pending. So if pendings are down by 8%, I take what sold last year and then I reduce it by 8%. Because if it doesn't go pending, it doesn't sell. And that's going to give us the single best reading on months of inventory. Let's just take the velocity of what's being absorbed by the market, reduce it by the current level of demand. That's why we were spot on when the market was on fire. And people are like, Dan, I don't understand your months of inventory. Remember back in 2018, 19, going to 2020, they're like, I don't understand. The board is reporting 3.5 months of inventory. You're reporting 2.1 months of inventory. Where are you getting this number from? Well, because I could tell that pendings were up 25%. So I'm adjusting the velocity of the market based on the current level of demand. That is why the board is reporting something less than 5.5 months of inventory. Mine is actually coming in a little bit on the high side because I'm adjusting based on the current level of demand on the market. That's why my number is different. And not to brag, but so be it. That's why I trust my number way more, because it takes into account the current velocity of the market. But we can see right here that we're at exactly 5.46 months of inventory. That puts us at the front end of a neutral market. That's going to be between 5 and 7 months of inventory. And you can see the number of active listings, 14,793. And we can see all these dots are going to be April dots. Let's take a look at pricing, because we've got the final pricing figures for the month of March. I have not updated April quite yet. I don't like to start reporting on sold information until we're 10 days into the month. Because if I were to report sold information right now, it would show, well, I'll tell you right now. Let me do something here really, really quick for you. I'm going to take a look. I'm going to search the 6-county area. And I'm going to go sold so far this month. So far this month, we've had 266 properties sell. And the median sold price right now for the month of April, median sold price is $499,000. So if I stick a $499 there, it's just like, wow, the market's on fire. The market's up 20%. Well, accurate. But the thing that we have to keep in mind is that more expensive homes sell in the first 1/3 of the month. So I'll hold back that information a little bit. Once we get closer to the 10th to the 15th or so, that's when I start publishing it. And then we do see the number go down as we start closing out. But we are able to forecast the number of sold properties, and we recognize that the average sold price, which right now the average sold price is $705,000. Previous month, $582. But once again, we had a $5.9 million property that closed here this month. So very expensive homes tend to sell in the first week of the month. But when you look at the final figures, 2,480 properties sold last month, and that is a 11.4% drop. You see how it makes sense all of a sudden, the months of inventory, where that right there is down 11.4. Well, we knew that was going to go down 11.4 because pendings were down about 8.5%. When you take into account back on the market, properties that fall through, it matches. So I am using that information, that leading indicator, the fact that we have a lower number of pending properties to adjust the months of inventory. Now, we did close out the month on a gain, month over month on the average of 4.2%, 2.4% gain year over year on the average. On the median side of things, we did have a gain month over month of 3.4%, but we did reverse course on the median sold year over year. So there's that 13,574 gain on the average sold price year over year, and that 4,082 loss year over year on the median. That goes back to the word that we've been using here for the past few weeks, which is a bifurcated market, where we've got properties that are selling that are really, really expensive. That's driving the average sold price higher. And then you've got properties that are just the lower end of the market, the bottom 40th percentile of the market is experiencing more pressure than the upper 25th percentile of the market. So even though sales are down across the board, we've got less of a drop at the upper 25th percentile. That's driving the average sold price higher as opposed to the median sold price. That is what's going on. Now, on the average side of things, we are down 14.52% from when the market peaked back in May of 2022. On the median sold, we are down 20.08% at exactly $110,000. As you know, the market peaked May 2022 at $550,000. We're at $439,534. Let's take a look at the economic calendar for the week and see what is going on with rates, what we can expect when it comes to rates. Let me go ahead and just move this screen over so you can see it. And let's look at this week. We've got employment trends index came in a little bit higher than the previous. That is good. I'll take that. Tomorrow morning, we've got the National Federation of Independent Business, Small Business Optimism. That's going to be interesting to see what that comes out. We've got Wednesday mortgage applications. We ought to see an increase in mortgage applications because we had a really good run on rates here ending last week. We've got crude oil inventory. That speaks to the economy. If you've got a massive buildup in crude oil, that means less oil is being used. That means that there's a slowdown in the economy. We've got, okay, there we go. We've got inflation numbers that will be published on Thursday. On Thursday, we've got CPI. On Friday, we're going to have PPI, the CPI, Consumer Price Index. That's coming out on Thursday. And then we've got PPI, Producer Price Index, which is the input side of the equation. That's going to be out on Friday. We will review this information on our Friday meeting. Don't forget, we are having a Friday meeting this Friday. Be sure to join us for that. We meet at the Austin Board of Realtors, Auditorium A. It's been great. Be sure to join us. But it's going to be a really, really big week for economic indicators that will absolutely affect rates. Let's take a look at the bond market, see what's going on. Are we still up? Are we down? What's happening? We're still up. We're still up a pretty substantial 12.3 basis points on the bond market on the 10-year Treasury. That is a guarantee. Let me go ahead and just turn around and see how far we are from these repricing lines. Yeah, so y'all, so far today, we've crossed 1, 2, 3. We briefly crossed 4 repricing lines just today, but we solid crossed 3 repricing lines. The rate sheet this morning did show an increase in rates at 6.5 for the conventional 30-year. We ended last week at 6.25. It's going to go up. I guarantee you. If we don't see a pullback within the bond market, it absolutely will go up. I'd say it's going to go up substantially closer to that 6.75. So all of the gains that we noticed over the past 2 weeks, it looks like if things do not reverse course here today, that we're going to see a complete just wipe away of all of those gains that we experienced over the past 10 to 14 days on mortgage rates. I mean, a massive, massive sell-off when you look at mortgage-backed securities along with U.S. Treasuries, a huge sell-off. So any questions, you all? Any questions about inventory? Any questions about the market? Any questions? I did post in our internal Facebook group what's happening with cap rates because we saw such a substantial improvement within the 6-month T-bill. We now have, let's go take a look at this all the way to the back. We now have 17 zip codes where the cap rate for that zip code, that's where we're taking the median sold price and we're calculating the GCI along with all of the expenses so we can get the NOI, the net operating income. We have 17 zip codes where the cap rate using those figures, it's above the 6-month T-bill. And that is the highest number that we've seen in at least 4 years. At least 4 years. More zip codes now are more attractive to investors, more attractive to people that desire a cap rate over the 6-month T-bill. So that's good news. That ought to drive a little bit more demand within our market, especially for investment properties. And we are seeing some really nice and attractive deals out there. I mean, take a look at the 78725 zip code. We've got the median sold price of $299,000 with a gross rent of $23,000. That's really good. That's really attractive. So there are some deals out there. There are some amazing opportunities out there. And use this cap rate resource. It's a great resource. You can see when you subtract the Austin area cap rate minus the 6-month T-bill, we're now down by 0.93. At one point, and you can even use this right here, we were down by 2.17, where the difference was negative 2.17. So why in the world would you buy Austin real estate where you can just park your money on a T-bill with guaranteed income? Well, right now we're at a 0.93 difference. That's a lot better, a lot better. So there you have it. It is 10:45. Wow, we just plowed through this information, didn't we? Oh, another thing that I do want to share with you, this is the price per foot. Let me go ahead and share this with you. The price per square foot right here. Price per square foot. Let me go ahead and make this a little bit bigger. Oh, I need to refresh this. Let me go ahead. I need to copy. Okay, that right there. I'll copy this into the, I'll launch the new one right there with the updated. But, you know, the price per foot has been a pretty fantastic resource that we've been using. let me go ahead and focus on a city, a specific city. I'll just click on any one of these. Let's kind of go to Cedar Park. We launched this not too long ago, and this has been a fantastic resource for listing presentations, for buyers, where you can see exactly the number of properties that fall within a price range, within a specific square footage range. So use this in combination of the affordability, in combination of the activity index, and you can get that entire summary right here on Market Update. When you click on Market Update and you go to Data and Analysis Reports, click on Access to Reports, any one of these cities, any one of these zip codes, we are able to consolidate all of the reports for that specific city, for that specific zip code. So give me a zip code. Someone here, give me a zip code, any zip code. 78634. Let's take a look at 78634. I'm going to go ahead and 78634 Hutto. So I just click on Hutto. There's Hutto. It's going to download all of Hutto. And we've got the active residential inventory giving you the entire summary, days on the market, activity index, months of inventory. You've got the chart. And then we go into the affordability. This is where you get the percentile breakdown, meaning, and this can be a little bit confusing when you first come across this, but this has become one of my absolute favorite resources. This is what this means. There are 282 properties that are currently on the market in Hutto as of this morning. We do a snapshot really early in the morning. And let's just take the 30th percentile. That's $365,000 and $176 a foot. That means that 85 properties are priced below this percentile, below 365, below 176 a foot. 197 are priced above. With 20% down, using Hutto's average tax rate, your PITI is $2,730. Your required annual income is $116,989. That's using the 28% rule. The next chart that we have is the activity index per price range, per square footage range. This symbol, the 0 with a dash, that means that there is not a single pending property, not one pending property. Now, you might say, well, how many properties are available? Well, you kind of go to the next one. So here's the next one. This is actually days on the market. And this is the number available. So let's just memorialize a few things. So here's the 300 to 350. We've got 16 properties available, 1,400 to 1,500. 300 to 350, 16. I go here and 300 to 350. And between 15 and 16, there's a 41.7% activity index. Very, very, very solid. Really, really good activity index. It shows you the days on the market. It shows you the months of inventory. It shows you the number. And then you've got the sold information. Then you've got the 25-year appreciation. So bottom line is that you're 3 clicks away from just taking this to a listing presentation, taking this to a buyer presentation, any information that you need for any of the 75 zip codes, along with the 30 cities, just 3 clicks away. So go to teamprice.com, market update. This is now the first link, data and analysis reports, access to report, anything. If you are showing a property to a client, you're like, well, what's going on with that zip code? I'm showing a property in the 78754 zip code. Go ahead and print this out. Take this with you. Click on the 54. It'll download the PDF. And it'll give you all the information that you would ever need for this entire zip code. So you are 3 clicks away from being the market expert for any zip code that you would ever show a client within the entire Central Texas area. 1051, you all, any questions? Any questions, comments, concerns, criticisms, or complaints? Any questions? Any questions? Going once. Going twice. Well, good stuff, you all. Well, that's all I have. It is 10:51. We usually do this for an hour, but we went ahead and just plowed through this information. And let's go ahead and just make the best use of time. We don't make any money having meetings unless it's meetings with clients. So, another topic, do we have a for sale by owner resource? Do we have a for sale by owner resource? And what's the context of that question? Like, do we have a for sale by owner resource? Like, how do you work with a for sale by owner, or what? Can you be specific on the question?
Hey, good morning. Can you hear me?
Yes.
Okay. Um, Surrounding the topic of someone that tells you they think they're going to sell their home
Hmm.
on their own,
Well, I mean, I sold
how
my
would you
first
approach that?
I
That's my
sold
question.
my first property for sale by owner, so they're certainly more than welcome to do that. Now, what I would provide, and let me go ahead and just access this information for sale by owner. We did a training here not too long ago that provides some really, really good stats on for sale by owner. And let me see if I can find this. We did a training here, and I will find it and I will send it to you. But the National Association of Realtors put out some really, really fascinating for sale by owner stats. FSBO. Let me see if I can find this here really, really quick. And it's really eye opening because statistically, for sale by owners will actually get less money for their property. And a lot of times they want to save the 3% commission. Oh, found it. Here we go. So this was a meeting that we had back in February 6th, here 2025, not too long ago. 90% of sellers sold with the assistance of a real estate agent, up from 89% last year, and only 6% were for sale by owner sales. The share for sale by owner sellers was a historical low. For 38% of all for sale by owner sellers, the main reason to sell via for sale by owner was because they sold to a relative, friend, or a neighbor. Getting the price right, 17%, selling within the length of time plan, 13%, and understanding and performing the paperwork, 10%, were the most difficult steps. Now, this is the last one, and I'll go ahead and just make this nice and bold because it's so eye opening. For sale by owners typically sell for less than the selling price of other homes. For sale by owner homes sold at a median of 380 in 2023, up from 310, but still far lower than the median selling price of all homes, which was 435. So I recommend providing this information to that person. Like, hey, I just want to share information here with you. And the other thing is, it's negotiate the commission into the price. If their issue is commission, we identify what their motivation is. But I'm a firm believer that are there some clients where that is a perfectly fine option for them? Well, sure. I mean, I love the fact that they just go to the Trek website. All the contracts are available for public use, and if they want to go out there and do it themselves, then fantastic. Like I said, I sold my first property for sale by owner and got a record high price for the property. So it worked out. I'd be the biggest hypocrite in the world saying you shouldn't do it. Now, should they know what they're doing so that they can maximize the value of their property, the asset of their property? Absolutely. Absolutely. But just have a conversation with them. But I've also told clients, it's like, hey, give me 30 days. If I can't sell your house 30 days, walk away. You might have need a little bit more nowadays. But if it's priced right and it's a great listing, I know that I'll be able to sell it and maximize that investment that they have. Great, give me a shot at it. But if they want to do it themselves, more power to them. I'm glad they have the right to do that. But this is a great resource just to sit down and have a conversation with that person. Ultimately, the goal, they need to do what's best for them, for their family. If it's selling with an agent, that's great. If they know what they're doing, they know the contract, they know the forms, they're comfortable, I'm glad they have the ability to do that. But this is where I would start. Very good question. Any other questions, you all? Any other questions about inventory, the market, or anything else? Any other questions? Questions, comments, concerns, criticisms, complaints? Good stuff. Well, I want to remind you that we are having our broker Q&A on Wednesday, along with our contract review and our working with buyers training. That's going to happen on Wednesday, 10 a.m. over Zoom. And then we do have our Friday team meeting, 9 a.m. mentorship, 10 a.m. team meeting. If you have any questions, please let me know. Here to help. Otherwise, have an absolutely fantastic rest of your day. And if you need anything, please feel free to reach out. Talk to you soon.